Wonderful, guys. So today's video is going to be a little bit different. As I said, what I wanted to do is I wanted to cover a trade from one of my students in the academy. The goal here is to help and to make sure that I analyze the trade in a way that is going to help the person improve the trade. So it's a trade taken on GBP GPY on the forward chart, which is here. I just identified a trade. I'll show you in depth what I think about this trade and how to maybe take a better trade next time, because that's the goal, how to improve. So when I start an analysis, and this is, by the way, this is for a day trader. So I won't go as far as the weekly chart. I'll just go on a daily chart to show you guys what's happening here. But one thing I noticed is that we are in a downtrend on the daily chart, but really the high level. Okay, this is a downtrend. However, now we are consolidating a little bit more. So we've been getting in this sideways movement, sideways market. Okay, so we cannot say we're in a downtrend anymore, because we're making higher highs, and we didn't make really higher lows, but we're still between those two levels, 152.5 and 1.3 pretty much, or 1.25, 125. Sorry. So this is where we are. So think about it sideways. We'll just keep this as a note now. We're doing multi-time frame here. So the next step then, when we've looked at the daily chart, is to go on a lower time frame. If we're going to trade on the daily chart, if we're going to trade on a forward chart, that's where we want to look at. But the question to think about first, even before this, is if we're going to trade this, what levels are we interested to trade? Are there any levels we want to trade? Because we cannot trade anywhere, right? You cannot just say, I'm going to sell here. Now we have to think about what are the zones to trade at. And what I see on this from the daily chart is that, yes, right now we have some sort of previous support becoming a resistance. This is a point you could trade at, possibly. Okay, a possible, and I'll just put a line because it's a possible point to trade at. Okay, this level right here, 1.147, pretty much. So now the person placed a sell trade on this pair, and sell trade was placed right here. Now the first thing I have to notice to you guys about this is that on the forward chart, we are clearly increasing, clearly in an uptrend. Price is clearly moving up, making higher highs and higher lows. So we have this low, while this low, this higher low, this higher low, higher low, higher low, higher low, always higher lows. So at this point, first of all, there's no reason to sell. There's no reason to take any sell trade. Now the person is using indicators in this trade. And what she told me is that indicators were all oversold, so showing that price would be likely to go down. So we'll take a look a little bit at this. And I'm not a fan of using only indicators. It's not the goal. You want to look at the zones first, then look at indicators, or price action first and then indicators. And before looking at indicators, we'll look at price action a little bit. So as I said, price making higher highs, which is a sign of bullish price action. If we're going to look at candlesticks now, we see that the bullish candlesticks are pretty strong. Okay, this is noted by this one here. And the fact that we didn't have big bearish candlestick except this one. But this is even before. And right here, where the trade was taken, we had always bullish candlestick. See how this big engulfing candle is strong? Second big candle. And just a small bearish shine. Okay, not that strong. So I wouldn't see how bearish price action comes into play here. And even with the trend is the biggest indication on this trade. It's the biggest thing showing you that you should not take any sell trade on this pair. But let's say we take a look at indicators at the same time. We've seen price was near the high of the Bollinger Band, which is one thing, but it doesn't mean it's going to go down. It's just one indication. If we take out the RSI, which a lot of people use, the RSI has been overbought at this level. Okay, on the daily chart, on the forward chart, it's been overbought as well. And well, we could go down, but it doesn't really serve anything at this point. But the thing I want to say is that this is a big mistake people make. People are going to say that the RSI is overbought, and they're going to think price has to go down. It has to reverse. Well, it's really not the way. It's really not the way it works. Because whenever you're gonna be in a strong uptrend, the RSI is gonna be overbought a lot of the time. If you're gonna be in a strong downtrend, the RSI will be oversold most of the time. If you're gonna be sideways, this is where the RSI comes into play. This is where you want to think about overbought, oversold. Because sideways, you have more chances to price getting overbought, coming back down, getting oversold, going back up. So the RSI can be used only sideways. Otherwise, there's no reason to even look at it. And yes, the RSI came back within the limit, okay, within here. But you never want to trade only based on the RSI. You want to combine this with other things, such as candlestick patterns, such as price action, the structure, and you want to have more confluence. The RSI alone cannot tell you how to trade. And if we go on the 4-hour chart, the RSI went to be overbought, came back within at 2 occasions. So one here, this one, where you might have taken a sell trade, but you didn't have any price action signal to tell you to sell. And you were at the highest high, so in an uptrend. At the second place here, well, you didn't have much price action too. You had this big bullish engulfing candle, or big bullish candle, more like a trend bar, with this small bearish candle. So no big sign of going back down. So to recap here, because I really want to make this clear and make this actionable for anyone watching. More for the people in the academy, but more for anyone watching even. So the first thing you look at whenever you want to place a trade, number one, is the market phase on the higher time frame. Are we sideways? Are we trending? And what can we expect? What are the zones we can trade at? We said the zones. Well, we have this one here, 147, or the one here, 152. Now this can apply on any time frame. If you're gonna trade the 5-minute chart, you can do this on a higher time frame as well, on the 15-minute chart, the 2D-minute chart. It works as well. So second thing, when we look at the phase, we think about what market phase are we in now? So we're in a trend, or we're sideways. Then what price action signal do we have at the zone to take the trade? So we'll go down on this time frame, and we didn't even reach the zone here. But if we were to reach the zone, what signal do we have telling us to sell? Now here, it's getting different because we're more sideways. We're starting to consolidate. But here, we are always increasing higher highs, higher lows. We don't have any evidence to even think about taking a sell trade. And then the next thing is price action. Of course, you look at candlestick patterns. You look at indicators if you want after that. And you try to make a setup from this. But the key is, I want to say, you have to define your plays in advance as well. You cannot just come in without any plays and hope to take some trade. You have to define the plays in advance. So I hope this is not too brutal, but I do want to make a point here that you need to go step by step. And you need to consider the market phase, the trend, price action, and then indicators when you take a trade. So if you have any question about this, let me know, and I'll do my best to help you out. Check out the Facebook group at thisartoftrade.com/group, and I'll see you guys pretty soon. Ciao.